Mortgage deductions are a big item on many people's tax returns, but since the housing crisis, mortgage debt forgiveness has been equally as big, and that has helped millions of borrowers avoid foreclosure. But now that help may be in jeopardy if Congress doesn't step in, and some people may be hit with a big tax bill. Diana Olick has more.
Since 2007, 2.8 million foreclosures averted because banks let borrowers sell their homes for less than they owed. Millions more borrowers saw the amount of their loans lowered thanks to legal settlements with the federal government and state attorneys general. All that debt wiped away tax-free.
Normally, you would have to pay taxes on that amount that's forgiven. It's considered income and it's taxable.
But in 2007, Congress passed the Mortgage Debt Tax Relief Act. It expired 6 weeks ago. And while there are bills in Congress to extend it, they're not moving.
And the client did not qualify on their income alone.
Real estate agent Marky Lemon is watching Washington from Chicago, where she counsels other realtors on foreclosure alternatives which are suddenly shrinking.
All it's going to do is prolong recovery. And we know that these people can't afford these houses. They have to prove financial hardship. And so if they don't have the money to keep a roof over their head, how are they going to be able to pay the IRS?
That's a question Tony Janega is asking. After 3 years of negotiations, his bank finally approved a short sale on his condo for $125,000 less than he owes. But it was a few weeks too late for the tax break. He could now owe the IRS as much as $30,000, which he does not have.
Now with this Debt Relief Act not being extended as of yet, I'm really nervous now. So I'm staying up late at night trying to, just can't sleep at night. It's causing a lot of stress.
While the foreclosure crisis has eased dramatically, there are still 3.24 million delinquent loans out there, plus 1.24 million in the foreclosure process. Added up, 4.48 million loans that could be helped by either a short sale or a principal reduction. While there is broad support in Congress and among state attorneys general for the tax relief, the bigger push to overhaul the entire tax code could leave smaller bills like this one in its wake. If so, short sales would no longer be an option for many borrowers, and foreclosures, which had been on the decline, could begin to rise yet again. For Nightly Business Report, I'm Diana Olick in Washington.